Hey, my friends, how are we today? So, on today's podcast, I have Sally Gimon on the podcast. She is a real estate investor and also an associate of Rosen and Rosen Law Firm. She's not an attorney, and we are going to talk about all things Spendthrift Trust. What is it? How did it get started? We're going to talk a little bit about Sally's journey, and I'm going to dive in. And I'm going to ask some questions because I always want to educate you, inform you of things. I always feel like the financial industry complicates things, which there's probably real truth to that. And also, how can we break it down to make it simple for you to empower you to understand more so about your finances and things of that sort. So thank you, Sally, for coming on the podcast and sharing your
Thanks for
knowledge
having
with
me,
us.
Erin. I appreciate it.
Yeah. So you want to dive in just a little bit about your backstory? Just share with the listeners, like, who are you? How did you get started? How did you even end up helping people do spendthrift? That's
Great
a tongue
question.
twister.
It is a tongue twister, and people are like, "Are you sure?" I'm like, "Yes." I'm a real estate investor. In 2019, I was working full time as a Medicare broker, and I wholesaled seven bank-owned properties nationwide. Paid off $184,000 in debt. I was a rock star. I knew about capital gains, and I had $50,000 sitting aside for my bank account. Where I got messed up was my personal taxes went from 22% up to 24%, and all of a sudden I owed $79,000 in capital gains. When your CPA calls you, does that you have to come into the office to sign paperwork? You know you're in trouble. So he had set up that for me to pay monthly. There was going to be some interest rates, things like that. Kept it together,
Because
signed
you
the
had
paperwork.
underpaid in your taxes, right? Like you had, so the estimated taxes,
Correct.
what
I didn't have the
Sally's
extra
talking about.
$29,000.
Yep.
I mean, like, oh, that was a
Yep.
shock to me.
Yeah.
So kept it together. Went down to I got my parking validated. Go down to the parking garage. Literally cried for 20 minutes. Drove home, and I don't know if you know this book, but The Power of Your Subconscious Mind. It's by Joseph Murphy. It's an old book from the 1930s, but it's one of my
Okay.
favorite books.
Okay.
I woke up the next morning, 5 o'clock in the morning, got online because I had read an article about the Rockefellers Spendthrift Trust. It's called The Office. It's 7 generations old. It has almost 400 people under the same EIN number. I'm like, well, if the Rockefellers can save taxes, why can't I save taxes? I spent 5 months researching the Spendthrift Trust, the middle of COVID. In September of 2020, I started both my business trust that saves me in 2022 and 2023, I saved 92% of my federal income taxes and did not pay North Carolina state taxes. And then my beneficial trust saves me capital gains, interest income, dividend income, rental income, and royalty income taxes. And in 3.5 years, I've saved six figures, and I'll never have to pay that back to the federal government. It's legal, it's in the IRS tax code, and it's been in front of the US Supreme Court.
Okay. So let's talk about what is the
Mhm.
spendthrift trust.
It comes from England, way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England. He went to go tax the lords and ladies of England, and they went further back to the Magna Carta. Um, it's contract law that came to the colonies while we were still part of England. It's on the federal level. So even if you're in Louisiana, which has the Napoleonic law for states, this is on the federal level, and this is why it can take care of U.S. federal taxes and state income taxes at the same time.
Okay. So what exactly like does it do? You did mention like what it saves you. So let's dive into like the five different, let's go back actually. How do
Okay.
you who is it for? Let's start there. Who is it for? Who does it benefit, I should say?
The business trust, I suggest people should be making at least $80,000 gross.
Okay.
When people make $80,000 gross, they're going to save at least five figures in all states. Some states don't have state income taxes, but it's year after year, generation after generation. The beneficial trust is for investors. So if a forex investor gets taxed twice, interest income and dividend income taxes. My first property that it was a bank loan property that I put up for auction. I paid $20,000 for. It went up to over $64,000. So I made $44,000 spread. I saved $10,353 on that first property in the trust, and I never looked back. I wholesale. I have notes, which are I have the paper on the house. People pay me their mortgage. That's
Mm-hmm.
interest income taxes. I have three seller financing houses where they couldn't get a mortgage. That's also interest income taxes. I have for rentals, yes, you can take depreciation. Yes, you can do cost averaging, but there's 4 ways the trust is going to save you that, I don't have to worry about someone trying to sue me. I don't have to worry about someone researching all my property in LLCs. This is all private. So it's an amazing thing.
Okay. So what it does is it allows you to have your income pass through the trust, right? Okay. And then in terms of your royalty, dividend income, long-term or short-term capital gains as well, interest income and rental income, it has a more favorable taxing structure, right? Is that a good way to say it? Taxing structure for those types of income. Is that a fair way to say it?
Correct.
Okay.
And Paul Benson, who was a Harvard law professor, he wrote the trust 76 years ago. The law firm is now run by his grandson and great-grandson, so the names changed. But in 76 years, not a single trust has ever been audited. They're so sure about this trust. When you start a trust, you get a certification saying if the IRS questions you, they will defend you free of charge. They've only had to do it one time, where a senior IRS agent examined the business trust for 5 hours, and then he signed off on it saying it was legal. And I mean, that's a track record you can't ignore.
So, because I am ever the investigator, right? Like, so Sally and I talk before the podcast, like this was several weeks ago. And I think I was aware of this. I don't know if I was aware that it was called or who it started. And so I started researching. And of course, what Sally's saying, like there is that stuff on the internet about like, hey, don't be so sure about putting your money in a spendthrift trust because you can get audited. And so is that, I know you work for the law firm Rosen and Rosen, but or you're an associate for them, but is that typical for most law firms where they will, go to bat, defend for the trust? Or is that just something that for the firm that you work for?
Quite honestly, there are over 1 million attorneys in the United States right now. Only 4% are trust attorneys. A textbook trust attorney study in law school is called Scott and Asher on Trusts. Most lawyers don't even get 2 hours of trust information. That's why everyone knows about the family trust or the living trust that my mom and dad had, Susie Orman talks about.
Yep.
Only thing that the family trust does is avoid probate. And then when the people who start the trust pass away, that trust dissolves, all assets have to be divided up.
Correct.
This is not your mom and dad's trust. This is what the Rockefellers, the DuPonts, the Carnegies have. The story is keep the money in the family, and that's what the Rockefellers did. And if they can save taxes, I want to save taxes. Erin, you should save taxes. Everyone should know this, so they have it in their tool belt. Maybe they don't want the trust, but at least they have education that's not being taught in schools anywhere.
Yeah, it's an option, right, to explore, so it is. And let's dive into like a revocable, right? Because I have a revocable living trust, right? So assets of ours are in the trust, and then yes, it goes to our child ultimately, right? Like, but she's too young to be the beneficiary. So we've divvied up other people. But so I can make changes that I want now within the trust, like as a revocable living trust. So this type of trust is an irrevocable living trust. Is that correct?
Right.
Okay. And so
the only difference between revocable and irrevocable, revocable is just your generation. Irrevocable is generation after generation after generation. Some people think, oh, you can't change things. I'm going to buy a car next month. When I go to the dealership, I'm not signing Sally Gimon. I'm signing Sally Gimon TT, trustee of the trust. So I can sell my car, buy a new car within the trust easily.
Yeah. So you can move and sell, buy assets and things of that sort within the trust. And so you are the trustee of the trust, right? But you cannot be the beneficiary of the trust. Is that correct?
Correct. I decide who are the beneficiaries and who are not the beneficiaries. So I have my brothers and sister-in-laws and my nieces and nephews in there. If I'm making this up, but if one of my brothers gets divorced, I can then say my sister-in-law is no longer a beneficiary. And
you can make that change.
Correct. I'm the one who makes that change. Correct.
Yep. Okay. So obviously the beneficiary is at the time of death, right? So your trust is going to live on even though you physically are not here on planet
Right.
Earth,
Right.
right? Um, and you have already decided who those beneficiaries are. And if you wanted to change your mind, then you could do that and move beneficiaries just like you did assets. Is that correct?
Exactly.
Okay.
Exactly.
So if you are a business owner, you recommend roughly 80,000 in gross income. What about also like a 1099? I mean, you're still probably self-employed, right? But 1099 income earner as
1099
well.
entrepreneur, anyone
Okay.
making at least $80,000. Just to give you an idea, here in North Carolina, um, making $80,000, there's four ways to file your taxes: single, head of household, married jointly, married separately. Single is the most expensive way. So if here in North Carolina, I'm making $80,000 a year in 1099 income, I'll save $14,191 each year. That's federal and state income taxes. It's my money to pay off my mortgage, to buy a new car, to take my family on vacation, to give to charity, to save for retirement. I can do whatever I want with that $14,000. It's my money.
And so basically the rates inside, like when you develop this trust, your royalty, your dividend income, long-term or short-term capital gains, interest income, and rental income, does it then become, because for those of you listening that may not, that the IRS is completely complicated tax laws, and
Yes.
right, so there's a marginal rate, right, that what Sally is referring to, and then we pay an effective rate, right? So your marginal might be at 22%, but effectively you might be at 18 after deductions and things of that sort.
Right.
But are the royalty, dividend, short-term, long-term capital gains, interest income, and rental, is that taxed at a different level, or is that just not taxed at all, or how does that work from a taxation standpoint?
It's you're going to save the taxes. The two taxes are different from everything else. Rental, royalty income taxes are taxed between 10% to 35%, seven different levels. And then long-term capital gains are on any profits more than a year. But if you held
Yep,
a
held the
business
asset.
or investment, that's either at 15% or at 20%. I'm not a CPA,
Yeah.
so I give people, how much it is. So a client of mine who just sold a family restaurant, a 42-year-old family restaurant, he's 69, his wife's 68. On April 15th of 2025, they will not have to pay either $460,000 or $600,000. That money is their money, six figures for their retirement. Their um, business broker who brought them, he referred them to me. He got
Connected.
paid a finder's fee. Then he told the gentleman who was buying the restaurant, this is the seventh restaurant, the business broker told the gentleman buying the restaurant about the business trust. So the business broker got paid twice for an affiliate, if that makes sense.
So I want to go back because I want to make sure I understand. So long term, and I haven't looked at the rates lately, but the long term, if you do not have a trust, and I know you are not a CPA, but just for the people listening so that they understand, if you have long term or short term capital gains rates for an outside of the trust, you're going to pay. I didn't research this, but like roughly it has been like anywhere from 0 to 15 or 10 to 20%,
Correct.
depending on the tax law, right?
Correct.
What you're saying now is if you have short-term or long-term capital gains rates inside the trust, what are you saying are you saying that the tax rates are different and or lower than what it would
They
be
go away.
outside? They aren't even there, is what you're saying.
They're not even there.
Okay. So is it correct to say that the royalty income, the dividend income, the short-term and the long-term capital gains, interest income, and rental income does have zero tax? Is that what you're saying?
Correct.
Okay. So if you have a business, you're 1099 and you don't have the Spendthrift Trust, you're going to pay the regular rates that whatever the tax law states for those types of income. If you have those assets inside the Spendthrift Trust, then it is 0% income taxable on those types of 5 types of income. Is that
Exactly. And just
okay?
to give you an idea, Erin, some people say, "Oh, I'll do a 1031 exchange."
Hang on.
Yes, you can.
For those people that don't know what a 1031 exchange is, do you want to explain that to them?
It's
Just real
when you
quick.
take a like property for a like property. So let's say it's a single family home, and then you get a larger single family home. That's just kicking the can down the street. Unfortunately, I have spoken to at least a dozen, 15 adult children whose parents are incapacitated. They either had a stroke or a heart attack. The children are selling off assets to pay for them to be in
Yep.
long-term
Take care
care,
for them.
and they get this humongous tax bill from the government going, what the heck? What did we just do? And like, they kicked the can maybe for 20 years. They
Yep.
just kept using it. With the Spendthrift Trust, that will never happen. If my great nephew decides to cancel the EIN number and dissolve the Spendthrift Trust, those taxes will not come back for him to pay them. That once they're
It's not a look back.
Correct. It's avoided. It's avoided.
Okay. Yeah, because that's what a lot of people in the real estate business typically do, right? Like you've generated some appreciation, right, in the home, and so you're able to buy another home, and then you have to roll that within this certain, I don't remember if it's 90 days or
It's a
something
crazy
like that, but
160 days.
yeah,
It's
yeah,
everyone I know who's done a 1031 exchange regrets doing it. They always get rushed doing it, if that makes
yeah,
sense.
yeah. So for that money to not be taxable. Okay. So then in terms, we talked about irrevocable and revocable. So let's talk about once you set it up, if I want to receive the money out of there. So let's just use general numbers. So you generate 100,000 of gross income in your business. Let's just say you have a profit margin of 70%. So 70 grand is and I'm just using this for easy math. So you have 70,000. So do you get to have that flow through to you and your family if that's what you wanted to take for distributions? And then how does that work from a taxable perspective?
As long as you're either the trustee or the beneficiary, there's no distribution.
Okay.
If I'm using my niece, she's dating a guy. They're going to get married next year. If I go to pay him money, he's not a beneficiary yet. I don't pay the taxes, but because he's not a beneficiary, he'll pay the taxes on that money.
Okay.
If I give it to my niece, who is a beneficiary, she doesn't have to pay the taxes because we're all under the umbrella of the Spendthrift Trust. If that makes sense.
So when does the IRS get their money?
They don't.
Unless as long as you are a beneficiary or a trustee of the trust, right?
Right.
That's basically,
Correct.
then they don't.
Correct.
But if you do give it to someone who is not a beneficiary of the trust, that's when it becomes taxable.
That becomes taxable to whoever that person is. It's
The receiver.
Correct, the receiver, not the giver. Correct.
Okay. Is there a limit on how many beneficiaries you can have?
The Rockefeller's Trust is 7 generations old. They have almost 400 people under the same EIN.
You did say that earlier, but I don't think I actually understood what you meant by that. So basically what you're saying is they have 400 beneficiaries under this one EIN. So if they want to give money to whoever those 400 people are, it's a non-taxable event, correct?
Correct. And they might have separate business. They all have their own different bank accounts, so they're
Yep.
not sharing bank accounts. But the Rockefellers actually have an entire system set up. If I'm a Rockefeller and I want to start a McDonald's, I have to take out infinite banking policy on myself and make the trust the beneficiary. So they get money from the trust. Then when I pass away, that money goes back into the trust. So the Rockefellers are just growing it and growing it and
Yeah.
growing it and growing it. My personal family trust is only 3 generations old. I would love to get it bigger than the Rockefellers, but I don't think that's going to happen.
Yeah. So let's talk about the benefits of the trust. Let's talk about, things that we may not like about it or things that we need to think about before doing it.
Okay.
So what would you say you had mentioned before there were like a couple of things like taxes,
There's 4
obviously.
ways the trust is going to save you in 4 very important ways. Taxes, year after year, generation after generation. It's going to keep your information private. Unfortunately, there's a false rumor out there that your LLC, S Corp, or C Corp does that.
Not true. Go look at Secretary of the State, wherever you are. You could go find me.
Corporation Commission, correct.
Yep.
Anybody can research it online now.
It is false because that is one of the things that was actually, now I know we're talking, we have a revocable living trust, but when I set it up with the, oh gosh, real estate, what is it? Yeah, like when I put our houses underneath there, it isn't it says trustees of, you think that that's what we're taught about the trust is that, oh, it'll keep it private and you can't, but you actually it's there's another type of trust that actually does that
But
yeah, and you can't it is
true story.
it's
When I
public.
lived in Leominster, Massachusetts, in my library, it had this humongous book of all the real estate, and I got in trouble because I took a black marker and blacked out my name, and I got someone to the court saying I can't do that. I'm like, I don't want people to know my name, my social
Yeah.
security number, the date I bought my condo. I was appalled. Anybody could look at this at the library at any time.
Yeah.
That just scared the heck out of me. So again, what nobody knows what you own, how much you own, where you own it, or what you do with it. That's all private because it's in the trust. Third way it's going to save you, lawsuits. All your assets are in the trust. And if they try to sue me, the individual, I'm worth nothing. You can't get blood from a stone. All those assets are protected. And then the fourth way, I'm not sure if you're aware of the 2024 Corporate Transparency Act from the Treasury Department. It's a paperwork the Treasury Department is asking for. With the Benson Financial Trust, you're exempt from doing this paperwork. I'm not a conspiracy theorist, but I don't know what they plan to do with the paperwork. I mean, they want my driver's license number, they want my EIN number, they want my passport number, they want my phone number. They don't need to have that information in one location. That's just my personal belief.
So, and then what are some of the, like, if you want to say like drawbacks or hesitations or reservations for not wanting to set it up, or why you wouldn't want to do this?
My one drawback, I'll be honest,
Yeah.
I went with Wells Fargo to have my business of beneficial trust. I have family living in Singapore, Poland, Alaska, all over the place. Wells Fargo will not give me a credit card on my trust. That's just one thing they won't do.
Yep.
Easy to set it up, easy to talk to them, everything else. So I'm building business credit for Dun& Bradstreet under my two different EINs. So I now just got two credit cards, one for the business trust, one for the beneficial trust, from SoFi and from another bank. I can't get a Wells Fargo. I have a debit card. I can't get a credit card. That's my only regret, or that's my only thing I don't like about the trust.
I agree with you. I think that there's the knowledge of, because, when I learned about the trust, when I ended up getting us our trust, and then there's the banking system or the financial system.
Yes.
And depending on who you bank with and who is your financial advisor or planner or brokerage, it can be sometimes a little bit of a interesting conversations. Like, for a long time, we did not have probably 4 or 5 months, right? We didn't have an actual, we had an online mailbox because we were just living out of suitcases. And I was declined by a brokerage company because I did not have a physical address. So it's like we create these wonderful things, but then there's a disconnect between the idea, right, and what we're creating versus the banking systems, the financial systems that can actually carry it out, right? And there have been numerous conversations that I've had is like, yes, you can do this, get me your manager or get me somebody else, because it's true, like what Sally is saying is that the intricacy of the vehicle that you're using, right, like in this case the spendthrift trust, and then the knowledge of the people that actually need to carry it out to make it, because just because you do a trust, you still have to what's called fund it, right? Like you have to put the assets inside the trust, and you have to work with people a lot of times, right? The attorneys will help you do that.
Right. We have a whole team that works with you.
We'll do
My
that.
personal banker here in North Carolina, I have to get on his calendar. No big deal.
Yep.
But I really did this January of 2024. I took my 12 notes and my other properties, and I made separate bank accounts for each one of them because one of my notes was not paying me on time, and I needed proof so I could start the foreclosure process. I mean, it took us about 2 hours. He was very easy to work with. And then in May, when I finally foreclosed on the property in Ohio, the trust handled it. The trust got the money, and then the trust bought another note with the money I earned from that. I owned the property in Ohio.
Yep.
I just wholesaled it because I didn't know what the condition of the house was. I've never been to that. So
Yeah.
it was other than taking the 2 hours in January to set this up correctly. So I do have 16 different bank accounts, but all under the same EIN number. So I get one how do I say this? I get 16 different statements and then one major statement from Wells Fargo.
The reason why you did that is because you were trying to decipher and really have a paper trail
Yes,
for to be able to foreclose on that one homeowner,
correct,
right? But for most people, they would just have one bank account or maybe a
correct,
savings account or something of that sort. Like they would have brokerage accounts or investments account, things of that sort. Um,
correct. And how he set it up with me, it's the name of the street, the not the house number, but the street, the name of the street for
yep,
each of those accounts,
yep,
and it's easy to work with. Another thing, that kind of funny thing that Wells Fargo did, they wouldn't open up my trust accounts, either my business or my beneficial trust account, until I had an associate trustee. Because if I walked out of the building and got hit by lightning or hit by a school bus,
yep,
and I'm like, I need a few days. I need to talk to my nephew. I mean, I'm in Phoenix. He's in North Carolina.
yep,
We had a conversation. He's like, and I'm signing what? I had to get the paperwork to him. He had to
yeah,
get the paperwork back to me. We suggest, the law firm and myself suggest, you have somebody in case something happens.
yeah.
But Wells Fargo was making it mandatory, and it did take me an extra week to do that.
We create these intricate vehicles in the financial industry because one of the things I also noticed was, even though I do not have a spendthrift trust yet, but with our revocable trust, even like the mortgage company wanted to see our entire trust, even though I gave them the certificate of trust. So does the spendthrift trust have like a certificate of trust where you can just give to the financial system and it hopefully they will accept that and that's sufficient enough? Is that
Correct. I have that. I've done several real estate deals here in North Carolina. Everything's with an attorney. I just take my whole trust booklet. If they want to make copies of it,
okay?
I just let them have it. I mean,
Okay.
they know who I am. They know what the trust is. Some people just don't. Most people have never heard of this, and they're like, "Can I just read through this?" I'm like, "Please do." I mean, from one of the attorneys I worked with, he's now sending clients to me, so I'm happy to share my
Yeah.
information as much as possible.
Yeah, that's what I was going to say. I think a lot of it is people don't know about it, so they are immediate no for it, right? Especially within the financial and the banking industry. And so, yeah, that was going to be a question I have. Is like, so what do you suggest? I mean, you get your certificate of trust, or if they want, but then it's kind of like defeats the purpose. Like we don't want it to be, right? We
Right,
want it to be,
one of my clients in Chicago was very adamant. He didn't want to take his trust booklet into the bank, so he took
yeah,
it's a 17-page group we have, and they said to him, "You can't open an account here." He searched and went to two different banks to finally, by the third bank, finally found out who would take the 17 pages. He's like, "I don't want them to know exactly what I have." I'm like, "That's
yeah. It's a
I'm
choice, right?
yeah, it's a choice. Maybe I'm much more trusting. Maybe I'm much
Yeah,
more, And he's just like, no. He has quite a bit of property in Chicago. He didn't want them to know exactly
yeah,
what he was doing, and it was
yeah.
it. He found the bank that worked with him.
Yeah, I think that that's what it goes down to. It's like, one, do you want your energy spent on finding the banks and all the things? Or, I mean, you could look at it as like, oh, I'm so defeated. I'm having to like, but it's like that's what I got to the point with our mortgage company. I was just like, you know what? It's not even worth it. What are they going to do with it? They're going to file it away. They're never going to look at it. Fine. Have it. Are there any other questions that I maybe have not asked that,
One question I get, and it's mostly based on Louisiana. They're like, "Hey, Louisiana has Napoleonic law for their state law. This is on the federal level, so it doesn't matter there." But I mean, I'm helping clients everywhere, and somebody I was just on a conversation with. She's like, "Well, I'll do this when a tax season." I'm like, "You don't understand. You're paying taxes every single month." Someone I talked to last week, an anesthesiologist nurse, where we're going to save them $90,837 a year per month. July, August, September, October, November, December, an extra $7,569. I mean, he's still working as hard as he is, but he's getting an extra paycheck per month on that. He's just like, that's a no-brainer. Start it now. But some people are like, no, I don't have to worry about this until I file my taxes. I'm like, we're paying taxes week by week, month by month.
I think that's a lot of people. That's how we, US wise, right? It's like, oh, I was just talking to a CPA the other day about this. It's like, and the way that he does with his clients, it's like, no, we do almost like 2 or 3 times a year we're talking about, we're seeing like, where's cash flow, what is profit, and like we're planning, right, very holistically, versus old school way of doing taxes is like, oh, it's January, let me send you the organizer and then you tell me what you generated and then we'll figure out your taxes, right? So something that, and also you don't want to wait. I always think about like, you don't want to wait till the end, because if there's lots of other people that wait till the end, right? And so either you could be like, hey, sorry, I've got too many clients, next year we can look at this, and or you're rushing through a process. Like, I think here we go back to sovereignty and empowerment. Like, you also need to read the trust. You need to look at it and you need to verify that what you and the attorney talked about is actually what is in the trust, and things of that sort. So giving yourself ample space to do that, and to ask your questions, and to take care of that stuff.
And quite frankly, this gentleman who I spoke to last week, he's just like, that's going to pay for us to go on vacation in August. I'm like, hey, that's a great thing. He's got an 11-year-old, a 13-year-old, and a 15-year-old. He's like, I got to figure out where to go.
Yeah. We talked about beneficiaries. We talked about, so do CPAs, if you were to ask not you, Sally, but if you were to go and ask your CPA, are they going to know about this? Like, do most CPAs and attorneys know about this type of trust?
Unfortunately not.
Okay.
Two different stories, if you don't mind me telling you this.
Yeah.
In April of 2023, the multi-family apartment convention was here in Charlotte. I bought a ticket. I went to lunch with 5 other people. One gentleman is up in New York. He scheduled a meeting with me because he thought it was going to be great. Get on the Zoom. He's just like, my CPA says you're lying. I don't want to talk to you. And got off the Zoom. We were done.
Okay.
Second thing, I do a Monday night presentation. It was a grown child. His parents have 3 apartment buildings in the Bronx that they're planning on selling. Talk to him. He sends me an email saying, I don't think my CPA agrees with this. I send him back saying, tell the CPA about Scott and Asher on trust, Black's Law, a dictionary. There's certain places to look for this. A week later, I have somebody on my calendar. It's his CPA. He's just like, I have so many clients here selling their apartment buildings. Let's JV together. I'm like, perfect. So it depends how open someone is and how closed off someone is, because the family's still going to have to file a regular 1040 tax return. We're just talking about saving the capital gains on an apartment building you bought in 1972. That's going to be humongous.
Huge. And is it as long as the sale happens within the trust? So like, even though that, like you're talking about this one family with the apartment, even though that the apartment has not been in this trust for 40 plus 50 years, as long as at the time of sale that the asset is inside the trust, that is when you're, air quotes, protected from taxes. Is that a good way to? Okay.
And then, another person I worked with for the month of June, he's selling a bakery. All the depreciation he took on the equipment, his CPA did a whole bunch of things.
Yep.
Now the bakery's in the trust. He doesn't have to pay all that back. And he's just like, that's saving me thousands and thousands, because the equipment was written off over 15 years or something, and it saved him thousands of dollars on that.
Yeah, I don't know if Section 179 comes to mind. I don't know if that's specifically, but but it's
CPA,
depending
so
on what type of
yes.
it's like depending on what type of depreciation schedule you have, right? Like, you have all that depreciation that's been written off. Anything else that I haven't asked that people like, because you're aware of this and you know this, that
people keep telling me, how come I don't know this, or how come my CPA doesn't know this?
Yep.
No offense to CPAs, they study what they need to do. 97% of all tax returns in the United States are 1040 tax returns. A million attorneys out there, only 4% are trust attorneys. So only 4% study Scott and Asher. It's just information that people don't have at their fingertips, unfortunately.
Yeah. I know that you are associate with the law firm. Are there, obviously they can come to you. Are there other law firms and things of that sort, or like, tell us?
I'm in a group called the JV Directory. One of the gentlemen who run the group, his girlfriend works for a Manhattan law firm that has the trust. I don't know the title of it. Okay. They won't work with somebody until they prove they have $8 million in a bank account. And I'm like, okay, for me personally, in my real estate group, the average person joining is a 56-year-old gentleman who wants to make some money before he retires.
Okay.
If they wholesale or fix and flip a house and make $50,000 on it, at 22%, they're going to save $11,000. At 24%, they're going to save $12,000. Do 2 real estate deals in 1 year. You've got it paid for, and you're leaving a legacy for future generations. The trust is, I'm biased, but the trust is an amazing thing.
Okay. So where can people find you, learn more about you, things of that sort? And I'll put this in the show notes as well.
My squeeze page website is www.thetrustisyou.com.
Okay.
I have a free class on the Great Discovery. It's just my first name and my last name, www.sallygimon.com. If you want to set up a 30-minute tax breakthrough session with me, I'll walk you through, take you out to NerdWallet, a free website, show you the formula for taxes. Again, it's just something for people, they don't know
Education that we
exactly education.
That's like my biggest thing is like educate people, because a lot of you always hear that saying, the rich get richer and the poor get poorer, and I'm like, and we all get to get richer, right? Like, let's all find out and know about these things that can help us. And so I will definitely put all your information in the show notes. Thank you for coming on and sharing your knowledge.
Thank you, Erin, for having me. I appreciate it, and I wish you and your family a beautiful week then. Okay.
Yeah. Thank you.
Take care.